Welcome to the deep dive. Today, we're pulling back the curtain on a really compelling global business story, and it's one that isn't just about banking. It echoes across all sorts of industries worldwide. Beneath the headlines, what you find are businesses and often these, well, visionary leaders engaged in these kind of silent wars, these strategic contests. They're pushing boundaries, showing incredible ambition and, frankly, grit. So today we're taking a deep dive into this fascinating world of global expansion. It's a landscape just full of unexpected twists and turns, incredible resilience sometimes, and the kind of strategic moves that, well, offer really powerful lessons for all of us. And to really get our heads around these bigger global trends, we're going to use a very specific lens, the Pan-African banking battles, specifically between Togo's Ecobank and South Africa's Standard Bank. Now, look, this isn't just about banks in Africa, right? It's really a reflection of strategic expansion everywhere, geopolitical shifts, those intricate cultural chess matches that are shaping global companies right now. So as we unpack all of this today, maybe ask yourself, what can you learn from these huge contests? What can you apply to your own strategic thinking, your own business ventures, whatever the scale? Okay, let's unpack this then. To really understand the battle playing out in Africa, we kind of need to zoom out first, get the bigger picture. And the global banking landscape, wow, since 2020, it's been a serious roller coaster ride. I mean, you've got volatile interest rates making everyone jumpy.
Absolutely. Trade war tremors, sending ripples everywhere, the just relentless pace of digital disruption forcing everyone to rethink things, and now this huge imperative of green finance mandates.
Yeah, McKinsey actually called 2022 a roller coaster for banks. It demanded intense reinvention, resilience. It really tested them.
Right. But what's really striking to me is how these same global pressures are forcing such different strategies depending on where you are,
Yeah.
different responses based on regional strengths, challenges.
Yeah.
It's like this global banking paradox.
It really is. And what's fascinating, as you say, is how those global forces, they hit differently in different places, yet they create these similar underlying pressures, adapt or fall behind. Take Asia, for instance. You've got these mega banks, China, India. They aren't just growing bigger, they're actively overtaking Western peers
Overtaking how?
through really innovative strategies like embedded finance. It's quite clever.
Embedded finance.
Yeah.
What exactly does that mean in practice? Well, essentially, they're integrating financial services directly into platforms people already use daily, non-financial platforms. So banking becomes almost invisible, just part of the transaction flow.
Ah, okay. Like paying through your social media app or something.
Exactly like that.
Yeah,
Or within e-commerce platforms. It's incredibly powerful because it meets customers where they are. It's seamless.
I can see how that would be a major advantage. So that's Asia. What about other regions? You mentioned Europe.
Yeah, Europe tells a pretty different story. The big trend there seems to be consolidation.
Mergers and acquisitions.
Precisely. Banks are joining forces. And it feels like it's driven largely by the sheer need to fund these massive transformations. Digital upgrades, yes, but also the huge push towards green finance.
Right, the sustainability requirements, those are huge investment tickets.
Massive. And they're doing this amid what sources call stiff regulation. So cooling resources, combining balance sheets, it becomes almost a strategic necessity to compete and comply.
Okay, so pressure driving consolidation in Europe. What about North America? High interest rates there, usually good for banks, right?
Generally, yes. The high rate environment has been beneficial for profits, but there's a but. There's also significant regulatory pressure.
Ah.
And some argue that this pressure can actually sort of clamp innovation. It creates this tension, between making good money now and having the agility, the freedom to really innovate for the future.
Interesting. A balancing act. And Latin America, you mentioned fintechs earlier.
Oh, absolutely. Down in Latin America, you see this really fierce competition, but it's often between the digital giants. Think Brazil's Nubank or Mercado Pago.
Right, the big digital banks and payment platforms.
Exactly. It really showcases fintech's dominance across emerging economies, which of course poses a huge challenge for the traditional banks. How do you compete when you've got legacy systems, older structures, against these super agile digital first players?
That is the million-dollar question, isn't it? Speed versus stability, maybe.
Something like that. It forces everyone to up their game, digitally speaking.
So we've got these distinct regional pictures: Asia innovating with embedded finance, Europe consolidating under regulatory pressure, North America balancing rates and rules, Latin America dominated by fintech. It's quite fragmented. Does this fragmentation mean the lessons are totally unique to each market? Or are there sort of universal truths about expansion emerging here? Because it really feels like the Pan-African banking story isn't some outlier.
No, not at all.
It seems like a mirror image reflecting these global dynamics, the sovereign banks rising in Asia, the consolidation in Europe, those fintech insurgents everywhere. So when you hear all that, what really stands out to you? How do these pieces fit together globally?
I think what stands out is the universality of the pressure to adapt, even if the solutions look different region by region. Every bank everywhere is grappling with digital transformation, with changing customer expectations, with new regulatory landscapes, often including sustainability now. The specific context, be it embedded finance in Asia or fintech dominance in LatAm, shapes the how. But the why, the need to evolve strategically, that seems universal. And that's exactly what makes the Ecobank and Standard Bank story so relevant beyond Africa.
Okay, that makes sense. The why is universal, the how is local. So let's bring it back to that African flashpoint then. Tell us about these two main players, Ecobank and Standard Bank.
Right, so at the heart of this, you have these two titans, Ecobank, founded in Togo, right? And they built this really impressive Pan-African empire, something like 30-plus countries strong.
That's right, over 30, a huge footprint.
And their big aim, as I understand it, was really ambitious, connecting these fragmented economies across the continent, breaking down barriers. Very much so. A Pan-African vision from the start. Yeah. Then you have Standard Bank, built its huge base in South Africa, a real powerhouse there.
Yeah, massive in South Africa.
But then they made a strategic pivot, didn't they? Northward, starting in the 2000s, looking for growth as their home market, well, matured.
Okay, so two different origins, two different expansion paths, setting the stage for a rivalry.
Absolutely. And it really encapsulates the kinds of strategic choices any company faces when they look beyond their home borders. We saw this play out very clearly in a specific scenario in a place we're calling Country X.
Country X, okay. Yeah. What happened there?
Both banks were bidding for a significant regional bank there, head-to-head. And what's really telling is it wasn't just about who offered more money.
So more than just the price tag.
Much more. They were essentially pitching entirely different visions for that regional bank's future and for its integration into their wider network.
Different visions? Like what?
Well, Ecobank, true to its roots, championed deep integration. You could almost picture an executive saying something like, "We unite wallets, payments, commerce across borders." Their whole pitch was about making this bank part of a seamless, continent-wide flow.
Connecting everything. The Pan-African dream in action.
Exactly. Contrast that with Standard Bank. Their pitch focused much more on, let's call it regulatory sophistication, robust governance, stability.
How did they frame that?
You might hear a manager from Standard Bank asserting, our compliance, our capital, our systems, they scale. It wasn't just about the money they'd bring, but the strength of their underlying operational structure, their risk management, their ability to handle complex regulation.
Right, so one is selling integration and flow, the other is selling stability and systems. That's a fundamental difference in approach.
A fundamental difference. And that's why these battles are so fascinating. It goes way beyond a simple transaction. It's about strategic philosophy.
So it really wasn't just about who writes the biggest check. It makes you wonder, in a market like Country X, when these two giants clash with such different value propositions, what actually tips the scales?
That's the crucial question.
Is it the price? Or is it something less tangible, like who seems better at integrating culturally, who can build trust quicker on the ground, who really understands the local nuances?
There's likely a mix of all those things, varying from deal to deal, country to country.
And maybe could that focus on deep integration, while it sounds powerful, also create vulnerabilities? Maybe navigating all those diverse regulations across 30-plus countries gets incredibly complex.
That's a critical point, absolutely. Deep integration offers huge network effects, but it demands exceptional coordination and harmonization across very different environments. It's a high-wire act.
So if we connect this back to the bigger global picture, these African banking struggles, do they echo strategies we see elsewhere?
Oh, completely. There are direct parallels with global corporate strategies playing out right now. Think about a giant like HSBC, especially in Asia.
Okay, HSBC. How so?
Well, HSBC has had to structure itself around incredibly divergent markets in Asia and globally. They've had to execute what analysts call an east-west pivot, just to navigate the significant geopolitical headwinds, shifting focus, adapting structures.
That sounds a lot like the kind of adaptability needed in Africa, operating across so many different countries and political climates.
Exactly. It mirrors that need for both agility and robustness, being able to bend with the geopolitical winds while maintaining a strong core. It's a challenge global players everywhere face.
Okay, that's a strong parallel on adaptability. What about other themes? Green finance, maybe?
Definitely. We mentioned European banks merging partly to fund green financing and digital tooling. It's become a core strategic driver there, not just a nice to have.
Right.
And look at Standard Bank in Africa. They made a very concrete pledge, something like R450 billion in sustainable finance. That's a huge commitment.
450 billion rand.
Wow. Yeah. And the key phrase is to align with global climate demands. This isn't just PR. It's presented as a strategic investment. It arms its growth, as one analysis put it. It shows how aligning with global purpose, like climate action, can actually become part of your competitive strategy, opening doors, attracting capital.
So purpose-driving profit, essentially. Finding opportunity and sustainability.
Precisely. Especially for large, established players who need to demonstrate long-term vision.
And digital integration. That seems key for EcoBank.
Absolutely central. EcoBank's whole expansion really hinged on enabling cross-border digital payments, creating those seamless financial flows we talked about, overcoming the friction between fragmented economies.
And how does that compare globally?
Well, it directly parallels how massive global initiatives like the Asian Infrastructure Investment Bank, AIIB, or China's Belt and Road Initiative, BRI, have sought infrastructure integration, but often on a physical level, roads, ports, railways.
Connecting economies physically versus digitally.
Exactly. EcoBank is doing it digitally, with finance. But the underlying ambition is similar, creating seamless flow, integrating markets, whether it's money, goods, or services. That drive for integration is a really powerful universal strategic theme in our interconnected world.
It's quite striking, isn't it, how these strategies, adaptability, sustainability, integration, echo across continents, across industries, whether it's HSBC pivoting, European banks funding green tech, or EcoBank building digital bridges. So thinking about these global examples, how do they really illuminate what EcoBank and Standard Bank are trying to achieve? What are those common threads of ambition, of adaptation that you see running through all these stories?
I think the common thread is this intense pressure to define a unique value proposition in a rapidly changing, complex world. You can't just be big anymore. You need to be smartly big. You need to be adaptable, like HSBC. You need to align with broader societal goals, like Standard Bank's green finance push. And you need to leverage technology for integration, like EcoBank. It's about finding your strategic edge, whether that's through deeper integration, superior systems, or a specific focus like sustainability, and then executing relentlessly while navigating all the local complexities. That seems to be the game everywhere now.
Finding that strategic edge, and often driving that edge comes down to the people at the top, doesn't it? The leaders. What's often missed, I think, in these big corporate stories are the individuals, the sometimes superstar CEO leaders who are actually shaping these strategies day to day. Their vision, their choices, their resilience, that's crucial.
Absolutely critical. Leadership makes or breaks these ambitious global plays. And it raises that important question, what kind of leadership does it actually take to navigate this level of complexity?
Let's talk about the leaders here. Standard Bank first. Sim Tshabalala, right? He's co-chief executive. How is he generally seen?
Well, the descriptions you often find paint him as very disciplined, compliance first, a long view strategist, someone who really embodies that idea of building trust through robust systems, through predictability, a steady hand on the tiller.
Okay, stability and structure.
Exactly. And there's that quote often attributed to him, or at least reflecting that philosophy. We invest in systems and regulation build trust that transcends borders. It really sums up that approach.
And the results seem to back that up. You mentioned their earnings.
Yeah, the numbers are quite telling. Standard Bank now apparently earns something like 75% of earnings from East and West Africa. That northward pivot executed under that disciplined, systems-focused leadership. And it's clearly paid off significantly, a testament to that strategy.
75% from outside South Africa. That's huge. Okay, so that's Tshabalala and Standard Bank. What about EcoBank? Jeremy Awori is the CEO there now. What's the perception of his leadership style or the bank's approach under him?
Awori, and EcoBank's ethos more broadly, often gets portrayed differently, more as perhaps a Pan-African idealist, a growth evangelist, deeply focused on that integration aspect, knitting systems together across borders.
The connector vision again?
Yes. And there's a bold declaration associated with EcoBank, perhaps capturing the spirit.
Yeah.
Pan-African unity isn't marketing. It's our business model. It's not just a slogan. It's positioned as the core engine of their value proposition, weaving economies together through finance.
It's our business model. That's a strong statement. So you have this really interesting contrast. Chabala at Standard Bank, systems, compliance, trust through regulation. Awori and EcoBank, unity, integration, trust through connection. It makes you think, which approach is better? Or maybe that's the wrong question. When does each style truly shine, do you think? And where might they face, unexpected hurdles in today's world?
I agree. Better is probably the wrong way to frame it. They represent different strategic choices, each with strengths and potential weaknesses.
Like, for instance, that compliance-first approach from Standard Bank. It builds stability, sure. But could it sometimes slow things down, make it harder to be agile, especially when you're up against nimble fintechs?
That's a very real tension. The disciplined, compliance-heavy approach is vital for large-scale stability, especially in banking. It builds that crucial institutional trust, manages risk effectively across diverse markets. You need that foundation. But yes, it can indeed be slower. Slower to adapt to sudden market shifts, slower to roll out disruptive technologies, maybe more cautious in entering new, less regulated spaces where fintechs might rush in.
And the EcoBank approach, the integration idealist model.
Well, that approach potentially allows for faster expansion, especially in capturing cross-border opportunities. It directly addresses the fragmentation issue. It can build powerful network effects if successful.
But the challenge...
The challenge is immense complexity. Managing, harmonizing, integrating across dozens of different regulatory frameworks, cultures, technological standards. It requires incredible skill, constant vigilance, and perhaps carries different kinds of operational risks. Both approaches demand immense resilience from leadership. Navigating complex stakeholder landscapes, governments, regulators, customers, investors in multiple countries simultaneously. It really underscores that there's no single best style. It's about strategic fit. Choosing the leadership approach that best aligns with your specific goals and the context you operate in.
Strategic fit. That makes sense. Okay, so we've looked at the global context, the African rivalry, the leaders. Let's try to distill this down. What are the key strategic takeaways here for, any business strategist or entrepreneur listening?
Yeah, let's pull out some actionable lessons. First, I'd say, scale is a strategic asset, but not just any scale. Geographical diversification.
Spreading your bets, basically.
Exactly. It's crucial not just for finding new growth avenues, but maybe more importantly to hedge regional risk. If one market hits turbulence, political, economic, whatever your presence in other, hopefully stable, markets can cushion the blow. It builds resilience.
Okay, lesson 1. Diversify geographically to hedge risk. What's next?
Second, M&A isn't just about the financials. It's fundamentally about cultural integration. We touched on this with the Country X example.
Right. Buying assets versus merging cultures.
Precisely. The success or failure of mergers and acquisitions so often hinges on cultural integration. Do the people fit? Do the values align? Do the ways of working mesh? If not, even the most financially sound deal can just fall apart post-merger. Integration takes serious, deliberate effort.
That's a big one, often underestimated. Okay, number 3.
Third, regulators are not hurdles. They are key stakeholders. You absolutely need to win them early.
Don't just react, engage proactively.
Yes. Their influence is enormous, especially in sectors like finance, but increasingly in tech and others too. Proactive, transparent engagement can smooth your path for market entry, for new product launches, for expansion. Build those relationships. Don't wait for problems.
Makes sense. Treat them as partners almost. 4th lesson.
Fourth, sustainability isn't optional anymore. It's becoming strategic. Look at Standard Bank's R450BN pledge. The source suggested this green credit arms its growth.
Right, enabling growth, not just ticking a box.
Exactly. It shows how purpose, particularly around climate and sustainability, can actually drive profit, open new market segments, attract investment, and enhance brand reputation. It has to be integrated into the core strategy now, not just a side project. It's a potential competitive advantage.
Okay, sustainability as strategy. And finally, any 5th takeaway?
Fifth, and this is maybe more nuanced, use alignment, sometimes over ownership. Think about that example of Stripe, the global payment giant, buying Paystack, the Nigerian fintech.
Okay, how does that relate?
Well, that acquisition, by bringing global tech but keeping local expertise, arguably allowed players like EcoBank and Standard Bank to focus on their strengths and shape local-first futures, maybe through partnerships or using platforms like Paystack. It shows that sometimes the best strategy isn't to build or buy everything yourself, but to find the right partners, the right ecosystem alignment. Knowing when to collaborate, when to acquire, and when to leverage others' platforms is key to shaping your own path effectively, especially in diverse local markets.
Choose alignment. That's interesting, knowing where you fit in the ecosystem. So scale, M&A as culture, regulators as stakeholders, sustainability as strategy, and choosing alignment, those are powerful. And these are incredibly specific lessons, yes, drawn from banking in Africa, but you can immediately see how they resonate, right? Challenges faced by businesses everywhere, from tiny startups trying to scale to massive multinationals navigating global complexity. They really show us that the playbook for global success isn't static. It's constantly evolving. It demands real strategic depth, constant learning, and that adaptability we talked about. So for everyone listening, as you think about your own work, your own organization, which one of those lessons really sticks with you the most? Which one feels most relevant to your challenges right now? It's worth considering. So as we wrap up, we see Ecobank and Standard Bank casting their flags, expanding across Africa. But their race, as we've discussed, it isn't just some isolated regional story. It really profoundly reflects these bigger global tectonics, Asia's economic rise, Europe's strategic consolidation, America's ongoing reinvention, the digital disruption everywhere. These African banks are navigating the same global currents as everyone else.
They absolutely are. They're both responding to and shaping those currents within their own vast, complex region.
So thinking about these massive global shifts we've explored today, new economic powers, digital transformation, the green imperative, it makes you wonder, what are the next big battlegrounds emerging for businesses globally? What arenas will define the next chapter? And maybe more importantly, what kind of innovative strategies, what kind of leadership qualities might define the next generation of truly successful global leaders? What will they need to win? It's a big question to ponder.
Before we finish, it's really important we add a crucial disclaimer here.
Yes, please do.
We, of course, can't know all the intricate behind-the-scenes details of these complex corporate sagas involving Ecobank, Standard Bank, or any other company mentioned. Our deep dive today, it's based entirely on publicly available information, news reports, company statements, public records, analyses. We've aimed to synthesize that to offer you the most informed perspective possible based on those sources.
Absolutely. Transparency is key. This deep dive was just one glimpse into this incredibly dynamic world of global business expansion. There's always more beneath the surface. Thank you so much for joining us on the deep dive. We hope this gave you some food for thought. Make sure to subscribe so you don't miss our next exploration. And maybe leave considering this. How is your business or the organization you're part of thinking about building beyond borders? How are you preparing for the next big shift, whatever it might be? We'll be back soon with more surprising facts and deep insights.
You've been listening to Empire and Legacy, African Business Chronicles. Our hosts are Zuri Mwangi and Kwame Adeyemi. If you enjoyed today's episode, be sure to follow us on LinkedIn, WhatsApp, X, Instagram, and YouTube. All links are in the show notes. Subscribe to the podcast on Spotify, Apple, or your favorite podcast platform, and share this episode with fellow business leaders. Main episodes are released each Monday. Our hosts delve deeper into the CEOs at the helm on Wednesdays. On Thursdays, we explore the global perspectives, the standout businesses and CEOs, emerging trends, and geopolitical developments, presenting both risk and opportunity. We're back each week, sharing more stories about the exciting business rivalries shaping the future of business across Africa. Empire and Legacy is essential listening for business professionals and leaders. Be sure to subscribe to be the first to know when new episodes are released. Until next time, stay tuned.